Hey, everybody, it's Rob Roy from WealthBuildersHQ.com. Welcome to Technically Trading with Rob. I hope you're having a great day. I hope it's been a good trading day for you, meaning I hope you've been playing the downside or at least got some protection in place if you have not. Market-wise, has been a pretty interesting place to be. We're down right now about 80 points. Let's see. We're down about 80 points right now on our S&P 500. If you take a look at the chart, if we could bring that full screen. There we go. Thank you, sir. You can see this big candle here. I mean, it has just not been a pretty day at all. I mean, at all. So we gapped up. Closing price here from yesterday, we gapped up, and we gapped up to a key level. That key level, although it does not represent a standard support and resistance line, it has importance to it based on the rest of the Fibonacci. And what I mean by that is this. If we back this up, and we've talked about the fib on the S&P before, but we've got it drawn from this swing low candle. If you remember, is when you have a low, a lower low, and then a higher low. So that last one, that middle one, is your swing low. That's what we have right here. We had a low, lower low, and a higher low. So we identify that as our bottom, but not until we get this run and we get a high, a higher high, and a lower high. And we got a pullback that made it almost to the 236. That 236 level is a key or critical level called hesitation. And stocks tend to hesitate around there. And the expectation is a pullback into that range is a very strong move for the overall momentum of the stock. And it did pull back. It bounced. It wound up failing and broke through just a little bit, came back again. But what I did is I took then where we've got our swing low and our swing high, and I drew what's called an ABC pattern. So A is where we started the fib. B is where we ended the fib. C is the lowest low the stock had made in its pullback. Once we got that pullback down to that range and we bounced, which we couldn't draw until, over here at least, it draws three lines. It drew this green line, it drew this purple line, and it drew, let me just scrunch down a little bit here on our chart. Let's try that one more time. Oh, there we go. Wrong keys. Brand new computer, the other one broke, and we've got to press a button now to get the function keys to work. And then we've got a line drawn up here, the one, which is 7,100. So what these levels are, it tells me that from this pullback, once we get a breakout, we want to see it get through this 236. Remember the 236, what it represents, all 236s, hesitation. That's our first point. We may bounce up to that level and fail right off of there. If we do, I don't want to be in that trade early. So we're going to wait for it to clear. In an ideal world, it would clear, retest, and bounce. Not how it worked. It broke out, pulled back here, and then we got a new all-time high. And this, by the way, was an all-time high at that point. We got a nice bounce off of there. And then the 618 is a target. Now, ideally, I like these lines, this green line, the 236, the 618, and the 1. I like them to be overlapping other Fibonacci levels. It's not. So is the 618 important? Kind of. But what's most important is this green line. Yes, it is not overlapping, but whatever the distance is on our Fibonacci move, and I'm going to estimate it with a drawing tool here on Omega Charts. It's called a dollar difference tool. We're going to come down from where we started to where we ended. Doesn't matter if you match up on the candle or not. Just get the lines in there. So I'm pretty close. I'm not exact, but I'm pretty close. It's about $388 in there. If we go ahead and do the exact same thing from this low up to this green line, and again, I'm close. I'm off a little bit on the bottom there, but you can see that shows $381. So it's the exact same distance. Whatever the move was from A to B, in other words, where the fib started to where the fib ended, then it pulled back. From the pullback, we're doing a 100% extension, anticipating, expecting the same overall move we've already had from A to B. That's the run we initially had from the pullback, from this low right here of our C. So that level gives us a target, an ideal of where we're looking to go to. There's a trading method that I use called a stacking method. And when I find a stock that is in a channeling pattern and I draw the channel, I take that channel and I stack it on top and below. I do it twice. So if we got a standard channel, I put 1, 2. On the bottom, I put 1, 2. So I've got 5 different channels on there, and they're all identifying off of that one pattern move. Instead of us having to wait for 2 or 3 times inside of that channel, which you need in the normal channel, once it breaks out of there, every one of those levels become the next extension level. and we're looking to move down or up to that level if it breaks from there. This is an extension pattern. We're looking for where does it go next based on where it's been historically, which overall is a phenomenal pattern for us. I love the structure of this. Let's see, 1, 2. Oh, I might have done too much there. Let's undo that. All right. So as we're looking at this move to the downside today, what does that give us? What is that telling us? Well, I'm not concerned with it at this point. We did move into a bearish bias, all in one fell swoop, all one day, all AI related, right? Fears of what's going on with AI and tech, overvalued, and all of that fun stuff. I'm sure you could find some political stuff to throw in there as well. But we've got a swing low down here. That is our lower low. If we can stay above that low, I'm okay. But here's my concerns. Not fears, concerns. Things that we need to be cognizant of. We put in a high. Actually, let's do it this way. Let me just draw this line in there first. Okay. So when we pulled down off of this all-time high, we had pulled down, we had a swing low that we broke on this day. We broke the previous one on this day also. So that was very bearish move. We catapulted the next day right back up again. We blew back through all of it, and we put in a new all-time high. We broke through the previous swing high. Doesn't have to close above there, just has to pierce it. Even by a penny, you broke through it. But now we came down, and we broke that swing low. So what's happening is we had a nice bullish pattern in here going up. And now we have a high, a low, a lower high, and now a lower low. So what was our bullish trending pattern now turns into a bearish trending pattern. So the identification component, excuse me, becomes the next swing low, which was down here. So we've got to keep our eyes open for that next low pattern in there. As long as we stay above there, we're okay. If we violate that, excuse me, if we violate that, we've got some key levels. There's a black line that I'm going to venture to say, unless you follow me, you do not have on your chart, nor do any of the other traders that you might notice out there. And that key level comes off of major Fibonacci levels. It's the 6765. If you take a standard Fibonacci number sequence, you learn this in grade school with rabbits, right? 2 rabbits become 3, they become 5, they become 8, 13, 21, 34, 55, 89, 144, and so forth, right? That's a Fibonacci number sequence. And it starts by adding 2 numbers next to each other up. So if you take the 2, which became 3, and take 2 and 3 and add it up, it's 5. So 2, 3, the next Fib number is 5. So then you take the 3 and 5, add them up, it's 8. Take the 8 and 5 and add them up, it's 13. Well, you keep doing that in the sequence, and you come up with 6765, which is this black line right here. That's one of them. And I have multiple lines like that drawn on there. The next one down is 4181. I can't remember the one above because we've not been to it enough. 4181 was a major number for us for quite some time. But if we violate that level, there's nothing holding us up. Now we literally are looking at every swing low, which is this one here, and then all the way back down here again. So we've got a tremendous opportunity of a push to the downside if we violate this swing low and then the 6765. Could it happen? Yes. Am I expecting it to happen? I'm not going into this saying this is what's going to take place. I go into the market every day with a plan, and that plan is if the market does this, I do that. It's no different than playing hockey or any other sport, right? When I played hockey or when I played football, right, I was the tackle, right? If someone took a step to the right, I knew I was doing this. If the quarterback did this, I knew I was doing that, right? I would go after, and I played offense and defense as a kid, but I would go after whoever had that ball, but I knew based on what that quarterback did where I was supposed to be, right? It's no different here. Based on what the market does, I know what I'm doing next. And my expectation is the market's going to move. I just need to follow the move and trade the pattern, trade the market at hand. Here, I will show you a method right now where you can be right 70 to 80% of the time. Simple. Stop trading against the overall market, because in general, 70 to 80% of all stocks tend to move in the direction of the S&P 500. Now, I know there are inverse relationship stocks, and there are 2 and 3x stocks that go for and against what markets do. I'm all with that. That's fine. I'm just talking about if you're trading Apple and the NASDAQ is up today, trade bullish patterns on Apple. If you're trading Costco and the market is down today, trade Costco to the downside. Can you trade the opposite direction? Yes. Should you? Only if you're an experienced trader. To start off, why would you do anything that puts the odds against you? 70 to 80% of the time, you have the opportunity of being right. Why fight it? Trade in the direction of the overall market. But bottom line is, it's going to come down to finding the right candidates to even start with. And I want to talk a little bit today about an indicator that I use called Wilder's Average True Range, WATR. Now, there's an average true range and Wilder's average true range. Right? And the average true range is based on the previous day's high and low. Right? Wilder's includes today's open. I like Wilder's, although you can get away with just using average true range. When you go to TradeStation, as an example, they call it average true range, but it is actually Wilder's average true range that they use there. If you can't get access to Wilder's, Wells Wilder's is the one that created the indicator. But if you can't get access to it, then just use the average true range. At least it gives you a good guide. So if I am looking at a stock and saying, okay, on this particular stock, I want to look to trade this. Maybe I find a candidate today. I don't know. Maybe I'm looking at Ford. Right? Let's change this over to Ford. And Ford is trading at $13.85 a share. Right? I'm going to switch my template a moment over to a different template. And change the indicators a little bit. And as we look at it, down on the bottom, I show an indicator of Wilder's average true range. So if I am looking at Ford and I see Ford and say, okay, I think Ford's a candidate I want to trade today. How much do I want to make from Ford today? Well, I'd like to make $1. I'd like to make $2. I'd like to make $10, whatever your number is. I look at Ford, and if you notice right about the bottom of the screen, just above that on the right-hand side, it shows Wilder's average true range 13. I use a 13-day measurement, the last 13 days. What was the average high to low for the stock in question, in this case, Ford? It is 29.76, so 30 cents. The stock only moves 30 cents a day. By the time this bounces off of support, gets up to your target, which is going to be under resistance, how much are you looking at? There's nothing in there. You got a bid-ask spread if you're trading options, forget it. It's not worth it. Ford is too low of a price for me. If I go and look at, let's see, AVGO, which is Broadcom. Broadcom moves $15 a day. Now, it's a $335 stock. That may be too expensive of a company for you. May not. It's okay either way. But you have to understand this. I know that if we failed today on Broadcom, and watch, you'll see exactly what I'm talking about. If we look at this on a shorter time frame, let's go to a 5-minute. We failed on this 5-minute candle, right? This dash line right here, vertical dash line is today's, yesterday's close. The start is the first candle. We gapped up. We ran up, ran down. We're going to look at a 1 minute, actually. There's a lot of movement in there. Let's try to hone in just a little bit more on the one. Let's bring that in. All right, so I'm going to zoom in on it, and then I'm going to back it up because I just want you to have a really easy view of this. So we got above, and we stayed above. We closed right at support. We bounced up. We closed at support. We bounced. We closed at support. We failed. We came back and closed at support, and we rolled over. Now, on a daily chart, if we go back to it, you will see that we had overall bearish connotation going on in the market. Without a doubt, this was a bearish looking candidate. We had a move down on our fib, bearish move down. We came up to the 382 level twice and we failed. The last time we got to 236, which was a few days ago, we've played on that level, but our tops keep kind of rolling over. We get a slight lower top and we're just waiting for the big drop, which happened today. Right? Assuming it stays where it is. We're only at 10 to 1 right now, Eastern time. So there's still some time left in the market. So as we look at this back on that shorter time frame, we go back into the 1 minute time frame, you could see as we came down, retested and closed at the fib, as we rolled off of this, $1, $2, $5, whatever the number is, as it rolled off of that level, we have the place to enter into that trade. All right. So if we go back now to a 5 minute, we saw the entry there. We go back to a 5 minute. And one of these candles in here was our entry on that 1 minute candle, right? And we take this rollover in here. Now, if I'm trading this and I'm holding it as a day trade, and let's say that my goal is to just hold on all day long. I think this thing is going to run. I don't think we're done yet today, and I'm making it up, if that's your opinion. I don't think it's going to stop. I think we're going to continue to push to the downside today. I'm holding on. I'm watching it. I'm paying attention, but I'm not moving. I'm watching this position. Right. And I look at this stock right now. We've got a lot of opportunity to the downside. We've already dropped $8. This moves on average $15. So we've got another $7 or so to the downside potential on this stock. But now that doesn't mean it can't move more, and it doesn't mean that it doesn't move more. It's an average. That's all it is. It gives me a place to start. So when you're looking for candidates, you want to make sure that you know what your bare minimum is. And I can't give you that. For me, $3 is almost a drop dead that nobody should be looking at anything under $3. Because if you're waiting for a stock to bounce off support, and let's say it does, how much does it have to bounce before you take the trade? 50 cents, $1? How far from support does it have to get away? Let's say it gets $1 away from support. Now it's got to run. And let's say it runs up your resistance, but you want to get out before resistance. So let's, again, easy math, let's make it $1. So $1 below. So if you had a level where the stock was at 100 and it broke through and it got to 101 and resistance was at 103, right? $3. That's your bare minimum, right? 100 to 103. So you get in at 101. You're going to be out at 102. You got the opportunity to make $1, but what's your risk in that trade? It's at least $1, probably more. I don't have enough to give me a reward risk ratio. Stop using risk reward. Stop making the first thing that you think about the risk. Make the first thing that you think about the reward. There's a mindset component that flips a switch when you talk reward before you talk risk. So get it out of your head. Just like, don't say losing trade. It's a cost of doing business. When you go to lunch today, you know it's going to cost you $20 for lunch. You didn't lose $20. It's a cost of doing business. That's what this is. It's a cost. So I want to find stocks that have at least X as a minimum. 3 is a bare minimum, and that would be someone maybe with a much smaller account that's just getting started out, and or I just don't want to put a lot of risk at all, period, in trades. I'm going to look for maybe those lower price stocks. But I think going to $5 gives you a better opportunity. So if we go ahead and just build out, if I go ahead and create a new filter inside of here, let's go create a filter. All right. I don't know what. All right. Didn't look like it was happening there. New. All right. It's on another screen. Let me bring it over. So let's just go ahead and let's work on price first. So we're going to go to price and volume. So price is close. We're going to go to the closing price. It starts off as percentile. We're going to switch it to dollar amount. We're going to say, I don't want anything that's under $50, and I don't care about the top side per se. We're going to take care of that in a moment. Oh, actually, no, let's not do that. Let's say 200. Let's just see what we wind up with. So right now, there are 3,682 stocks that fit my criteria so far. I'm going to go ahead and click on this, and I want to go into a symbol group of weekly optionable stocks. I'm an options trader. I normally trade for the day. Weekly optionable stocks is a pre-made list in Omega charts, so I don't have to do anything with it. They update it every week. So 234 stocks on our list. All right, let's go ahead and go back to where we got price from, and let's go to volume. Now, we're not going to use a weighted volume. We're not going to use a volume average. We're using volume. And my volume minimum, not percentile value, is 1 million. I think I might have done too many zeros in there. Yeah, that was too many, I think. I never put a top volume. I don't want a max volume. If it goes to 100 million today, I want to know about that. I'm not capping it, right? So we've got 207 stocks. Do you realize 50 to 200, there's 207 optionable stocks, and there's only 600 optionable stocks, 6-ish, 650, whatever the number is. that are weekly options. We're going to add one more thing to this. And we're going to add miscellaneous. It's under. And when I make a criteria, I save it with my initials RR. Everything has my initials RR on it. And I'm looking for RR WATR, Wilder's average true range. So it'll be keep going, keep going, keep going. Okay. So Wilder's average true range of, let's say, 4. Right? If I put that in there, it tells me there are 80 stocks that move at least $4 a day for the last 13 days on average. That's wonderful. I now have a list that I can work off of and start looking at, do these stocks fit my criteria? Will they all work for me? Absolutely not. They will not all work for you. If we save this, I'm going to do RR test to delete, just so I know what it is, right? And once it's saved, I go to display list. It's going to put it here. I'm going to clear all the symbols that are in there. And what I'm going to do is I am going to identify and sort this by what's called a Fibit. Now, the Fibit is just double the Wilder's average true range is all we've done. We've doubled it. Okay, so I'm going to close this down at this point. And the very first stock, the very lowest one that I have is $7.59, which means it's a Wilder's average true range of 4, so it's half. All right, so we're looking at Dollar Tree, DLTR. Let's get a little more time on the stock. A little bigger picture. Actually, I'm going to go over to template number 2. Where my moving averages are, because I already have the Wilders. We're kind of in the middle right now on Dollar Tree. I'm not interested in it. I want to find something that's near a key level. Let's keep going. AFRM, I don't have anything on that one. I'm not going to worry about it. DG. All right, so we're near support on a moving average. No fib drawn on this, but we are near support on moving average. All right, we've got a great fib in here, kind of in the middle, so really not interested in it. PSX, I'm not a PSX trader. Gilead, I like to move on it. DEC, DECK. Lennar. All right, so Lennar, let's wait and see today's candle. It just takes a half a second to catch up. Today is 12, right? Yeah. There we go. So Lennar is sitting right near a key level. Lennar moves on average per day about $4.25 as a minimum. I've got a support at 121. I've got resistance at 128. Round numbers. It's close enough. I don't need exacts here. Okay. If I've got a $7 opportunity and it moves $4 a day, there's a chance that I can get a good strong run into this, the $4 for today. Am I going to target my up here by my resistance as my target for today? No, because we don't normally get there. So I know that about $4 is all we normally get. So could I don't know, could I put an order in right now that says when the stock gets $3.50 above where it's at to get out of that trade? Sure. Can the stock start creeping up and I get an alarm set a little bit under that and the alarm triggers and it notifies me to cancel my order to sell and I put a trailing stop in instead? Could you just do a trailing stop right from the beginning? Absolutely. But you need to know what stocks are going to fit your risk profile. You've got to identify this. Now, I'm not saying that you shouldn't be trading higher value stocks. We said a minimum of 4, right? If I flip this script and go the other side of this coin, AGQ moves $42 a day. $42 a day. Now, I'm not saying it's a good stock. That's why it moves $42 a day, because of that big drop in there. But let's go to A-Lab. Right? They move $32 is 2 days, so $16 a day. Right? MSTR, which is MicroStrategy, Coinbase, Shopify, Oracle. All of these stocks have great movement to them. And I'm not saying you should trade any of them. What I am saying is find a minimum amount that the stock moves a day, average of, with a Wilder's average true range, and that'll help you to build out a list to get started with. And if you've got that list already, use this to help you identify how much of the move can I actually capitalize on. If I've got resistance $5 above where I'm at, and we can move $10 a day, we've got to make some decisions as it gets up to that resistance. It may roll over there. You may want to make adjustments to how you have your exit strategy. But now at least you've got a plan based on how much the stock tends to move. All right, so hopefully that was helpful to you all on identifying those candidates and adding that to your list. I think it's critical, right? Make sure you focus on whatever your support and resistance lines are that you use, whether they are fibs, support and resistance, ranges, whatever you use. Make sure that you know how to tie all these pieces together to help you become a more profitable trader. And with that, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Take care, and I'll see you all at our next update next week. Bye for now.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.